Welcome to Inside the Vault with Bank of Utah, where we discuss important topics and current events regarding banking and finance. Our goal is to be a resource for you to help you make well-informed decisions about managing your money. We hope you'll find this information beneficial. So let's get started. Let's open the vault to today's episode. Welcome to Inside the Vault with Bank of Utah. I'm Sherry Hansen, and joining me today is the president of Bank of Utah, Brandon Hansen. Thank you for coming today. We appreciate you being here.
Yeah, thanks for having me, Sherry.
In our podcast, we like to talk about some of the current events in finance, and one of those emerging topics is cryptocurrency. Brandon, you've been following cryptocurrency for so long. Can you give us an overview?
Sure. Well, you say the word cryptocurrency, and I think most people think cryptocurrency is one thing. Today we're going to focus on Bitcoin. And if you remember nothing from this podcast, remember that Bitcoin is very different than any other cryptocurrency, and that's why we're going to focus on that a little bit today. A couple things to know about Bitcoin. It is the largest cryptocurrency by market capitalization, currently over $1 trillion in market capitalization. Bitcoin was first introduced to the market in 2009, so it's been around for 15 years. And it's really quite exciting because for the longest time, we've had a really limited number of assets in which to invest. And what I mean by that is you can invest in real estate, you can invest in stocks, you can invest in bonds, you can invest in commodities and other things. We haven't really had anything new to invest in for about 200 years. And now here comes digital assets. And so everybody's excited about this because there's something new in which people can invest. And whether you think there's value there or not, it is up to your thinking, your view of it. And we'll talk a little bit more today about, why I think there's value there and why I think it's important.
Okay, so people are investing in it. So is it real? Is it a scam? What's the difference?
Yeah, it's really interesting because Bitcoin has a couple of properties that in my mind make it real, make it valuable, that there's a real use case to it. And the first thing I would talk about is exchange of value. So when two people are in person, it's very easy to exchange value. I could give you a couple dollars, you could give me a soda pop, or maybe we could trade my watch for your watch. We can do that very easily when we're in person. But if we're not in person, exchanging value becomes more difficult. And for example, if you were somewhere else and I needed to send money to you, I could use Zelle or I could use Venmo, or I could use a credit card, or I could even wire money to you. And virtually every one of those systems require us to trust a third party. So we trust Venmo to make sure that my account gets debited and your account gets credited. When we send a wire, we're trusting the Fedwire system for that to function. If we use our credit cards, we're trusting the Visa network to make sure that happens. And so there's a third party that needs to be trusted to make the transaction work. Well, with Bitcoin, that's not required. Bitcoin is 100% decentralized. There is nobody in control of Bitcoin. There's no CEO of Bitcoin. There's no marketing department for Bitcoin. It really is a network run by people for people, and it enables us to exchange value without having to trust anyone, and no one's in control of it. And there's good and bad to that, right? We've had a lot of sanctions issued in the last couple of years because of wars and different political issues. Well, the Bitcoin network can't be sanctioned, it can't be controlled because no one is in control of it. And so that is a very unique property with Bitcoin. The second thing that I would talk about is property rights. So it's sort of interesting, and again, being a US citizen living here in America, a lot of this stuff we just take for granted. Back on the example of exchange of value, well, we can pretty much trust that all that stuff's going to happen. We don't have a lot of concern that someone's going to steal our money.
Or you have some way to get it back if something does go wrong.
Right, the customer service or however, you've always got a way to kind of work through that. And property rights is the same thing. In America, we have very strong property rights. We can feel really comfortable that when we own something, it's protected. I'll give you a great example. You own a home. If I come to your house and I say, hey, Sherry, this is my house, leave. What would you do?
I'd tell you to leave.
Yeah,
it's my house.
Yeah, maybe
I can prove it.
Yeah, sure. You'd probably call the police, right? The police would come and say, well, yeah, you need to leave, Brandon. And I might say, well, look, I've got a trustee that says I own this house, and of course you have a trustee too. Well, then we might end up in the court system. And then a judge comes out and says, well, no, Sherry really owns this house. You don't own it, Brandon, go away. So we have law enforcement and we have a court system that enforces our property rights. Again, we very much take that for granted here in the United States. There's lots of countries throughout the world where governments aren't trusted, or there isn't strong law enforcement or a strong court system to protect property rights. Well, the really interesting and unique thing about Bitcoin is that your property rights, your access to your asset, your digital asset, is solely through your possession of cryptographic keys, or basically a private key, or almost like a PIN code on your debit card. You possess this key, and as long as you have this key and it's secure, you have access to your asset. And you can use it to sell it or exchange it or manage it in any way that you want. So you have absolute sovereign rights to that asset, and you don't need to rely on a government or a law enforcement or anyone but yourself to protect your access to that asset. And again, this is good and bad. This is like the exchange of value. Again, no government can control it or sanction it or take it from you. And so it's really great for citizens that have that. It's really bad for governments that want to control people or want to access their assets.
And it obviously takes a lot of initiative on your part to keep that key safe. What if you lose it?
Right. If you lose it, it's gone, right? There's no way to recover it. Again, there's not a Bitcoin company. There's not customer service. Hey, reset my passcode. It doesn't work that way. If you lose your key, you've lost access to that asset and it's gone forever. So yeah, there is a lot of personal responsibility. Now there's ways around that. There's different ways to manage that asset that don't require you to do that. But in its purest form, that's how somebody would manage that digital asset, is with their private key.
So is this the same as owning Bitcoin in a brokerage account or in my Coinbase account? What are the differences there?
Yeah, that's a really great question, and it leads into three things that are really happening right now with Bitcoin that are pretty unique. So in January of this year, the SEC approved the first spot Bitcoin ETF. So an ETF is basically either a collection of stocks or different assets that are cobbled together, and you can just buy the one ETF and get access to those stocks. In the case of the Bitcoin ETF, basically if you were to buy $10,000 of a Bitcoin ETF, the fund managers of the ETF go out and purchase $10,000 of Bitcoin. Now you don't own the Bitcoin, the fund owns the Bitcoin, but they have to back your investment dollar for dollar with Bitcoin. And it's a way for any of us to get access to Bitcoin, to the exposure of the Bitcoin price going up and down. But there's no cryptographic keys, there's nothing to worry about in that regard, because really you're buying a derivative of Bitcoin, which is this ETF. It basically gives you the same exposure from a price volatility standpoint as owning it directly, but again, you don't technically own the Bitcoin. The interesting thing about that development, of course, is this has now given the average investor an opportunity to participate in Bitcoin without having to be technologically savvy or worry about managing private keys or worrying about losing access to that asset. What's happened because of that, we've seen the price of Bitcoin go up dramatically. It hit an all-time high recently. As of today, it's trading at just under $70,000 a coin. And it's being driven up because there's widespread interest in these ETFs. In fact, there's an ETF out there for gold. So maybe you don't want to physically own gold, but you want to invest in gold. You can also do that through an ETF. Well, when the first gold ETF came on the market, it took 2 years for that gold ETF to hit $10 billion in market capitalization. It took the Bitcoin ETFs 2 weeks to achieve that same level of investment. So a lot of interest in this ability to invest in Bitcoin and get exposure to the price movement of that asset.
Is there anything else that's making it gather so much attention in the news lately?
Well, the other great thing that's happening, and it's going to happen here in the next couple of weeks, is what's called the halving. And I kind of need to explain mining to explain what the halving is. So as mentioned, Bitcoin is this decentralized network. Nobody controls it. And when you have a system or a network that nobody controls, how do you determine who's going to process the transactions? And what I mean by that is, if you look at Visa, for example, Visa owns its network. Every time you swipe your card, a fee is charged. Visa collects that fee for Visa providing the service of moving funds from your account to the merchant's account. Okay, and so Visa controls the network, they manage the transactions, and they process everything. But if you've got a system where money is being exchanged and somebody needs to process those transactions, what is the fair way to determine who gets to process the transactions and earn the fees? Well, that's basically what mining is. And if you don't have a centralized authority that's in control of the transaction, you have to come up with a fair way to have this consensus mechanism. And the way I like to think about mining, and this isn't kind of technically how it's defined, but in my mind, I view mining as a giant contest, okay? So we've got thousands of computers out there trying to mine Bitcoin, and mining Bitcoin is basically these super fast computers, specialized processing chips that try to solve a puzzle. And if you solve the puzzle, you win the right to process the transactions. Again, Visa doesn't have to go through this because they just process all the transactions. But this contest to solve this puzzle is the fair way to give everybody on the network a chance to process the transactions. So if I happen to win or solve the puzzle first, then I get the opportunity to process those transactions. Each block takes about 10 minutes to process. And then, of course, I get the reward for doing that work. Now, currently, the reward for doing that work is 6.25 Bitcoin. Now, in a couple weeks, that reward goes from 6.25 Bitcoin to 3.125 Bitcoin. So it gets cut in half.
Now, why is that? Is it because they're running out of Bitcoin? Why is this happening?
So there's only 21 million Bitcoin. It's hard-coded into the network. There will only ever be 21 million Bitcoin. And this process of halving basically prevents inflation from happening in the system. Bitcoin becomes more scarce each time the halving happens. Again, the halving happens about every 4 years. So I mentioned that each block takes about 10 minutes to process. Well, every 210,000 blocks, a new halving happens. And so each block isn't exactly 10 minutes. They speed up and slow down. The network adjusts itself every 2 weeks. But basically, after 210,000 blocks at 10 minutes, it's about every 4 years this halving happens. And it's going to continue to happen year after every 4 years until Bitcoin is completely mined. And it'll take until the year 2140 for that to happen. So when the first miners were mining Bitcoin, the reward was 50 Bitcoin. 4 years later, it went down to 25 Bitcoin. That got cut in half, gets cut in half again, and again all the way until the year 2140. And so basically the reward gets diminished. Now, if you're a miner, that's a bad thing, right? One day you're making 6 Bitcoin, the next day you're making 3 Bitcoin. But if you've noticed, the price keeps going up. It wasn't that long ago Bitcoin was trading at $30,000 a token. Now it's at 70,000. So they may be getting less Bitcoin, but the value continues to go up, and so it makes sense for them to continue this mining process, which again is the process is the mechanism to process the transactions and make sure the funds get moved from one Bitcoin account to another.
And some people say that when this halving happens, the price fluctuates with that halving.
Yeah, so that's a great point. Everyone's sort of expecting the price to go up because, again, Bitcoin becomes more scarce after each halving. I don't know if that's going to happen this time because we've had such a huge run-up in price already this year because of the ETFs. So that's very unique for this cycle that we have this ETF that's brought in, well, there's about 10 ETFs that do Bitcoin that have brought in billions of dollars. And so I don't know. It'll be interesting to see if the price continues to go up. Typically, it has gone up after the halving, so people are really looking forward to that happening.
Well, something to watch, definitely. So you've mentioned a lot of the positives about cryptocurrency and Bitcoin specifically. Are there any criticisms out there?
Yeah, so a lot of people don't like Bitcoin because, in the early days, Bitcoin was used for a lot of illicit type transactions. There was a website called the Silk Road that dealt in illegal drugs and other things, and Bitcoin was the currency that was used on that system. It's sort of interesting because, in a sense, Bitcoin is anonymous, but once you know somebody's code, their private key, you can track every transaction on the blockchain. The entire blockchain is available for review. Every transaction is on the blockchain from the very beginning of 2009. It's kind of funny. Everybody talks about blockchain like it's this really great new technology, but it's been around for about 30 years. And blockchains are really inefficient, especially in the case of Bitcoin, because the entire history of all Bitcoin transactions are basically propagated throughout all these thousands of computers, and every time it's updated, all those other thousands of computers have to be updated with the new blockchain. And so Again, it's used for illicit transactions, but law enforcement is getting better and better about tracking people down, understanding activity on the blockchain. And again, it's really easy to see the transparency there that you wouldn't normally see. You know, another thing about Bitcoin and other cryptocurrencies is the volatility. And if you're a speculator, sometimes volatility can be good. You can make a lot of money or you can lose a lot of money. Obviously, we're not giving any investment advice here about whether you should invest in Bitcoin or not, but it's quite volatile. And especially for an asset that's been deemed a store of value, well, generally for something to be a store of value, it needs to not be quite so volatile. And if you look at how Bitcoin trades, it sort of trades like a leveraged NASDAQ 100 ETF. It's sort of what we call a risk-on asset, meaning when you're ready to take risk or there's a lot of liquidity in the markets, this is a great investment. It sort of goes up when you see the NASDAQ go up, and it sort of goes down when you see the NASDAQ go down. Now, if people truly understood, the value of Bitcoin and what its use case is, it really shouldn't trade that way. But again, I think we're still very early in the process. There's a lot of speculators, and a lot of that is happening. The other problem with Bitcoin is from a liquidity standpoint. I read something that in the last 6 months, 80% of the people that had Bitcoin 6 months ago still have it today. And so you've got all this new money from the ETFs and all this interest going into a very small pool of available tokens to be purchased. And so, it's not super liquid in that standpoint. And, some very large purchases or sales can influence the price of Bitcoin. Part of why the SEC was hesitant about allowing it to be an ETF. So there's challenges there. And then, of course, there's the naysayers out there. It was interesting, a couple weeks ago, Jamie Dimon was here in Salt Lake City, and somebody asked him about Bitcoin. And he said this before, and he said it again that evening, that, Bitcoin's like a pet rock. And I can sort of appreciate that view because, again, in the United States, do we really need Bitcoin? Do we really need this permissionless, trustless way of moving funds? No, we've got plenty of ways to exchange value. We don't need to use Bitcoin. In fact, Bitcoin's really not that good as an exchange of value because the network itself, because it's inefficient, because it has to be propagated throughout all these computers every time a transaction takes place, it's not a very efficient system. And there's things being done to make it more efficient, but it's really not that great at exchange of value. To give you an example, Bitcoin network processes about 7 transactions a second. Visa processes like 7,000 transactions a second. So it doesn't work so well for that in a lot of cases. But anyway, he calls it a pet rock. And again, if you're here, we trust our government. It's easy for us to move money around. So maybe for real utility purposes, for the average American, it kind of is like a pet rock. But imagine if you lived in a country like Argentina and inflation is 20% a week. Or imagine if you were concerned about the government confiscating your asset. When you start to look at those situations and scenarios where, I might work all week long and I get a paycheck and within a matter of days it's worth nothing. If I could take that paycheck and immediately invest it in Bitcoin, that gives me something that's more stable, right? Maybe I am a refugee and I'm fleeing from one country to another. I can't imagine trying to carry a bag of money or even a bag of gold through the Darien Gap if I'm trying to migrate to the United States. It's going to get stolen. It's going to get taken from me. Well, Bitcoin allows you to have this private key that you could memorize. You could be a refugee to another country, get on a computer and download your wealth. Again, that's not a pet rock. That's financial salvation when you look at it in that regard. So again, I understand where some people are coming from, but we're really privileged and lucky in the United States that a lot of these issues don't affect us, being that we have the reserve currency of the world, really great property rights, and really easy ways for us to exchange value. Other countries, not so much.
So Brandon, traditional banks don't transact in crypto. You're a leader of a financial institution. Why do you feel it's important to be monitoring these digital currencies?
Well, again, in the perspective of other financial assets, Bitcoin is very, very new. We haven't had a new financial asset for several hundred years, and now we've got this new digital asset that we're trying to figure out and understand. And right now, the regulatory environment for banks is very, very negative. It's very difficult. Regulators don't want banks participating in this space. We have to get permission from our regulators if we're going to do anything. And to me, that's a little bit sad, because when it's not in the traditional finance, if it's not in the banking system, then it's on the fringes. And a lot of the fraud, a lot of the lost funds or customer harm has happened, with crypto exchanges that are located outside the United States or other areas. And so in my mind, it makes sense that this is adopted and becomes part of the regulated financial services that we can provide. There are banks that or other financial institutions that do offer custody services. What do I mean by that? If you had several $1,000,000 of Bitcoin and you're sitting at home with your private key and you're really nervous about losing that or something happening to it, you might want to have somebody else manage that for you. So Fidelity and some other companies offer custodial services where you can give them your private key. They will manage that for you. They will insure your Bitcoin and make sure what happens to that Bitcoin is what you want it to do, whether it's to pass it on to your heirs or do other things with it. So there is an opportunity, I think, for trust providers, trustees to provide custodial services. Again, right now, most banks aren't offering that service for a variety of reasons, but there's a real opportunity there, I think, for that to happen in the future. The other thing that a lot of people would really like is the ability to borrow against their Bitcoin. Obviously, Bitcoin is considered an asset, a commodity, and every time you buy and sell, or every time you sell your Bitcoin, it's a taxable event. And a lot of people that have huge gains in their portfolio don't want to sell and have the tax liability. Well, they would love to be able to borrow against their Bitcoin. And I think there's an opportunity for that to happen. Some of it's happened before. One of the banks that kind of got shut down during the Silicon Valley bank crisis was involved in this. But I think there's a real opportunity for us to do that. And it's actually, from a credit perspective, a very safe loan to make. Bitcoin is traded 24/7, and obviously you could make a loan against it. You could track the price of Bitcoin. If it falls below a certain level, you just liquidate the Bitcoin and pay the loan off. So there's probably an opportunity there for banks to be involved in that space. But again, getting through the regulatory environment on this is quite challenging right now.
Well, Brandon, thank you so much for sharing your knowledge with us on this. I'm sure there's more to come. Thanks for keeping us up on it, and we'll see you next time.
Thank you for watching this episode of Inside the Vault with Bank of Utah. If you have any questions or topics you'd like us to explore, please send them our way. And be sure to visit our website for more exclusive content and follow us on social media. That's it for now. Until next time on Inside the Vault with Bank of Utah.